into Ben Thiel's presentation to talk about Crop Insurance 101 and how, I guess, even what are the new potential impacts are associated with any new legislation. So Ben, I'm very happy to have you on. And as I mentioned earlier, Ben's with the Risk Management Agency, and I believe out of Spokane, correct?
Yes, that's correct.
Okay, floor is yours.
Okay, hopefully I'm sharing my screen. Can you see it? My presentation?
Yes, we can, thank you.
Okay. So hello and good morning. Thank you for having me present for this Ag Talk Tuesday in Federal Crop Insurance 101. Juliet, how much time do I have for my presentation?
You have a good 30 minutes.
Okay. So the information in my presentations may be geared towards those who know very little about crop insurance and have not used crop insurance. However, there is likely also some good reminders to those who have utilized crop insurance or currently have crop insurance. Before we get to the next slide, I want to draw your attention to the disclaimer on this current slide that's below to note that I'm just covering kind of overview of some features and benefits. Hopefully, though, this will make you more informed in general about crop insurance. So as stated in the introduction, I'm with the Risk Management Agency, a part of the USDA that manages crop insurance. I'm out of the Spokane regional office. My office covers Alaska, Idaho, Oregon, and Washington. And just like I'm presenting now, one of the key features of our regional office is to provide outreach to educate producers about effective risk management options and choices. And I'm the director of the regional office. So I want to talk a little about, obviously the drought has been part of this discussion earlier today, and I'm sure it's on the mind of a lot of producers out there. And I want to kind of differentiate a little bit about crop insurance and disaster relief. So crop insurance is in a different category of a safety net from federal disaster relief. Federal disaster relief tends to be ad hoc disaster payments. The key difference is that crop insurance is engaged before a loss has occurred. Ad hoc comes after disaster event. Ad hoc disaster payments are variable in that they may not occur after a natural disaster. It may or may not cover your actual loss. Any payments are likely to be made months or much later after the event. The federal government, though, through USDA-RMA, incentivizes crop insurance by subsidizing the cost a producer pays to get crop insurance. A few other key differences is crop insurance is permanent and formally structured with policy provisions with procedures to address a loss due to natural weather events, whether or not these events are called a disaster. Crop insurance provides more certainty for covering your actual losses than ad hoc disaster payments. This is not to preface or say that there is some disaster payments coming or that there has been. It's just acknowledge that the wildfires, droughts, various things bring up discussions about disaster, declaring disaster in certain areas. Crop insurance is not based on declarations of disaster. Additionally, disaster relief tends to be structured to have a loop back to crop insurance for future risk management strategy. So typically, crop insurance isn't required to qualify for disaster relief, but the combined insurance indemnity and disaster payment is higher than for those who only collect disaster assistance. Sometimes the condition of a disaster payment eligibility, like FSA's WIP Plus program, is that crop insurance must be purchased for the next 2 consecutive crop years at a coverage level of at least 60%. So if a form of disaster payment is authorized, the trend has been that they've put linkage to crop insurance, meaning if you receive a disaster payment, there's going to be a requirement that's subsequent to that. And with this current program, that you have to purchase crop insurance for the next 2 years at a certain level. So why federal crop insurance? I list a few things that could be reasons why to take crop insurance. It may help you stay in business after severe weather or a low production year. And crop insurance provides some financial stability and may improve your access to credit. In the Midwest, many lending institutions will not lend to a farming operation unless they have crop insurance. That is a collateral requirement. And I think the trend is starting to spread elsewhere, including the West. So what is crop insurance? I list sort of the various sort of realms of what crop insurance can be as far as the types of plans of insurance. So it provides protection from production loss, price decline, or a combination of both for individual commodities. There are production and revenue plans of insurance, which are based on producers' actual history, not what's forecast for them to produce. It's what you've produced in the past becomes your history on the land for producing that crop. There's also area plans of insurance that are based on averages in an area, like by county. The Farm Service Agency also has a non-insured crop disaster assistance program known as NAP that's available in counties where RMA crop insurance is not available for the crop. Since the focus of this presentation is about crop insurance in general, I didn't prepare individual slides on how each various plan of insurance works. However, a significant portion of crop insurance overall book of business is centered around producers' actual production history of insuring their yields with some type of insured price determination. But I wanted to briefly point out a few other unique plans of insurance that we offer. One is called Whole Farm Revenue Protection, or WFRP for short. This particular plan covers all of the crops that you produce on the farm. So it's not taking like a wheat policy or a potato policy. You can take those in combination with Whole Farm, but Whole Farm kind of forms an umbrella policy. It's covering everything you produce on your farm up to an $8.5 million insured revenue amount. This policy is based on tax returns as opposed to your APH and covers more things that impact revenue besides just yields, like the quality of the crop. Another interesting plan of insurance that we have is called Dairy Revenue Protection. This covers market fluctuations of the price of milk. Another heavily utilized program is called Pasture, Range, and Forage, or PRF for short. This is a rainfall index policy. Producer insures a grid, which is a land area for an interval of time that has an expected rainfall amount, which is based on a NOAA data set from weather stations. So there's a set amount that's supposed to rain in a certain grid area for a particular period of time, and if there's less rain, that potentially could trigger an indemnity.
Hey, Ben?
Yes.
Can you take multiple crop insurance off, both the whole farm and maybe specific farm or specific crop insurance for a potentially highly risky crop?
Well, highly risky is, I mean, that's probably a whole nother discussion, but I think the overall question is, can you take whole farm in combination with other individual policies? The answer is yes. You can take whole farm separate. I mean, you can take whole farm, and then you can also insure your wheat. You can insure your potatoes with individual policies, and it combines all together. There's kind of offsetting premiums and there's offsetting losses, but you're kind of getting all the bells and whistles. I'd say that's kind of a Cadillac policy. Mm-hmm. There are unique ways that an agent can structure that, where you can adjust coverage levels to maybe not quite make a complete wash, but you can finesse that a little bit so you're not paying too much extra for combining that. Now, there are some eligibility requirements that you may or may not be able to meet.
Okay.
So this slide shows the available crops for insurance in Idaho. So these are the crops that we offer policies for. And to kind of get back to what I mentioned on NAP that FSA provides, so if we don't have insurance for a crop in a certain county and you're growing that crop, you have kind of one of two options. Say there's a county that you grow onions in that we don't have an onion policy. You can either request a written agreement through us, Federal Crop Insurance, RMA, you go through your agent, or you can go to FSA and get a NAP policy for that crop. So these are all the crops we insure. You see the insured acres, the total acres, and kind of the percentage insured. Two crops to point out, because they're significant crops for Idaho's barley and wheat. Significant for the total number of acres, but also significant for the amount of acres that we insure, and they tend to be insured at higher coverage levels, especially your dry land crops. And also dried peas is heavily utilized at 92%. This slide just shows sort of what we also cover beyond just crops. We do have some livestock policies. You see sort of the liability that's being insured. We have a nursery policy, so there's some insurance going on there. And then dairy revenue protection, for liability, we're insuring a substantial amount of milk production. This slide shows what we call our pilot policies. Pilot just means that they tend to be newer plans of insurance. The policy hasn't been codified in the Federal Register. So their design can be tweaked from year to year. This is something that federal crop insurance has a board, and the board will review these from year to year, as opposed to, say, like the wheat policy, which falls under the small grains crop provisions. That changes very infrequently. It's codified. You have to go through the rulemaking process to make changes to that. But you'll note on whole farm for Idaho, we're insuring a pretty sizable liability amount. So whole farm does get utilized fairly well in Idaho. The #1 state in the country is Washington. Many tree fruit producers take whole farm. A lot of that is because they don't have the ability to insure for revenue under the apple policy. So whole farm provides that, and they'll tend to take both. They'll take both policies and bundle them together. This slide just gives you sort of an overview of the trend for the last 15 years. The acreage has certainly trended up. The policies maybe have trended down a little bit. Some of that could be attributed. There are fewer farmers over time because of consolidation. A lot of the growth in the acres, I didn't look into this specifically, but I think a lot of the growth in the acres is increased utilization of the pasture, range, and forage program. So this is a key feature about crop insurance, the insurance premium subsidy. This is what you pay for crop insurance. So going from left to right, you go from the lowest to the highest level of insurance coverage. This is the selection the producer makes. The lowest form of crop insurance or level of coverage that's available, and sometimes some crops, it's not available under revenue protection, it's available under APH plans. Yield protection is called CAT coverage, catastrophic coverage. It's 100% subsidized, but you do have to pay an administrative fee of $655. That's what you would pay for insuring the entire crop in the county. Now, the coverage is 50% loss trigger, meaning you basically have to have a 50% yield. This is a 50% yield deductible before any indemnity starts triggering, and it's paid at 55% of the insured price. So it could be viewed as cheap coverage, but limited coverage. Beyond that is what's called buy-up coverage with different deductible yield triggers, but any of those are paid at 100% of the insured price. So take a look at the 0.75, that means 75% coverage level. Below that number is a premium subsidy the government pays for the total bill. The producer premium on 75% coverage would be 45% because the government paid portion is 55%. To further increase savings on the crop insurance, for certain crops like wheat, for example, there's the ability to group the crop together in the county under an enterprise unit. Units are sort of how losses are determined, and it's sort of a grouping of where, when a loss occurs, how things are grouped together, and if they combine or stand apart. And the more you group things together, then you move into higher categories of units, enterprise unit being a consolidation of the groupings. And since that would be less risky, it's rewarded by the subsidy goes up. So on a 75% coverage level, the subsidy goes to 77%. So a substantial portion of that premium is being paid by the government as opposed to what the producer has to pay. This slide kind of shows a unique feature about crop insurance and unique across the government is crop insurance is unique with its public-private sector delivery system. The public side being RMA is responsible for developing and maintaining federal crop insurance policies. This includes determining the rates, prices, yields for each crop at the county level each year. RMA is also in charge of compliance to prevent fraud or abuse. The private sector side involves insurance companies and agents who are responsible for selling the insurance policies to the farmers and selling their claims. So I don't sell it. Nobody in my office sells the policies. We are part of structuring crop insurance to make it similar the policy itself within unique changes from county to county, whether it's a different yield or a different date. So why crop insurance and not other insurance? Property insurance, like a farm policy, doesn't consider growing crops is covered property. Federal crop insurance is multi-peril and basically the only form of multi-peril insurance for crops. The private sector views multi-peril insurance is too risky and wouldn't be affordable enough that producers would buy it. So if crop insurance didn't exist through the government and was only available in the private sector, for one, the companies would view it as too risky, and because of that risk, they'd have to price it accordingly and would likely not be affordable. Most of the same companies that deliver multi-peril crop insurance also sell crop hail insurance. It functions a little bit like crop insurance, but it's not multi-peril. You're covering a specific peril, whether it be hail, wind, or fire. So depending where you're located at, if you tend to be in a high hail area, you'll take crop insurance, but you might also take hail, and then you might exclude the hail policy from federal crop insurance to get a little bit of a discount, recognizing you're putting the risk on hail through the single peril private policy. Same thing tends to be done with fire as well. So what does crop insurance cover? Crop insurance covers unavoidable natural occurring events. Crop insurance does not cover events that are man-made, as other forms of insurance might cover those. So again, your property casualty insurance potentially could cover those. On the previous slide, I mentioned that crop insurance is multi-peril. This slide lists those coverable perils. Some perils have some subcategories of perils, such as adverse weather can include drought, flood, freeze. Fire is listed, but that is only coverage for natural occurring, the ignition source is natural, say lightning. There can be instances where fire becomes a wildfire in the sense that maybe down electrical lines cause the fire, but then extreme winds push it beyond a break point that it could have been responded to and controlled initially. This is something that sort of kind of raises concern for a lot of people about the what caused the fire. It tends to get kind of worked out, but just want to point that out. Sometimes another thing that also gets confused with crop insurance is they feel that natural events that impact the crop in storage would be covered, but that is not. Like snow collapsing a warehouse, flooding around a grain bin, a storm causing a power outage, and climate controlled storage is not covered under crop insurance. Coverage ends after you harvest the insured crop. And I just sort of threw this in for fun. These events are not covered by crop insurance. So working with a crop insurance agent. So an agent is your link to getting crop insurance and your resource for answering specific questions that are applied to your farm. Some things to be mindful of though. This information could also be useful to those with a general understanding of crop insurance. So this is something I kind of like to put in a lot of my presentations, that the delivery of crop insurance from an agent through the insurance company, from underwriting a policy and providing the loss adjustment in the event of a claim, that how they compete is their level of service. They can't compete on price because the price is fixed. As long as you have the same parameters, it's going to cost the same from the same agent, from agent to agent and company to company. So on the slide, I list a few things where farmers were polled where they list how they describe a good agent. So they know the agribusiness environment, which means they know your crop and how it's produced. They know the inputs, they know the diseases, they know the pests, things that would be considered good farming practices to produce the crop, and also how to harvest the crop and market the crop. So they have a general understanding of their area and a general understanding of the crops produced in the area. Now, there are some agents that are completely out of the state and out of the area that will sell in our area. I'm not saying that's good or bad. I don't know how exactly that works for sure, but I would think it would be better to find somebody that's familiar with your area and that's local. They also understand how crop insurance works generally and how certain policies work. Some agents might specialize in annual crops, some agents might specialize in perennial crops, but they stay current, provide guidance, send reminders, And when visiting with producers, they'll kind of ask questions, and they get familiar with you and your operation. I've had producers talk to me about their agents, that the ones that they like, and they say that, oh, I'm forgetful. I really appreciate my agent because they keep me on top of things. They send me reminders about deadlines, about I need to submit this report, or they make me aware of things I need to avoid. There can be a lot of dollars at stake in your farming operation. Someone that seems knowledgeable and professional would probably be the best to make sure you are taking full advantage of your risk management needs through crop insurance. This slide just sort of generally shows important dates within crop insurance. The first sort of column there is the sales closing date. This is the last date you can make changes to your policy, or if you're a new insured, this is the date you sign up for insurance. So to point out, for say wheat, all wheat, whether it's planted in the fall or in the spring, the sign up date is September 30th. I mean, that is the only date for wheat. Then, like a spring crop like potatoes, the sign up date would be March 15th. Then you've got some final planting dates. That's when the crop has to be planted by. And then you have the acreage reporting dates. On fall crops, like for wheat, you have the ability to choose what's called the winter coverage endorsement. That's covering damage that occurs in the winter. If you take that endorsement, then you have to report your planted acreage by December 15th. If you don't take the endorsement, you report all your acreage then by July 15th for the fall and spring. And then for perennial crops, just note the dates there. They're a little bit different. So you got November 20th as a sign up for perennial crops. So this graphic shows the crop insurance cycle. We start out with the application process. So that's the top right. And typically a lot of this begins for wheat in the fall, as the sales closing date again is September 30th. And once you plant the crop, that's when insurance attaches. Phase 2 is when you submit your acreage report. And this is also used to calculate your amount of coverage and premium. Phase 3 is the claims process, which could occur really any time, but this is when damage has occurred. You send a notice of damage, have the crop appraised, and submit a claim. Again, this is done through the insurance companies and their staff of loss adjusters. The final phase, what we call the contract change date. This is when RMA makes changes to the program for the coming year. We have to make changes well in advance from year to year. So for wheat, the contract change date for 2022 was June 30th. Some important things to consider during the insurance year. So one of them is to manage your costs and to also manage your level of coverage is you have the ability by that sales closing date to change your coverage level, which that's going to change your overall liability and subsidy level potentially when you scale up in coverage level. You can also make changes to your unit structure, whether they're optional units versus basic units versus enterprise units. And that's basically, do you want to reduce the cost of crop insurance, but by doing that, you're putting more eggs in one basket. You also have the ability, depending on which crop you're looking to insure, you could have the options of doing yield protection, revenue protection, or revenue protection with harvest price exclusion. And that's kind of what you envision, what you think the prices might do, and how you're covered for the prices going up or down. But overall, work with your agent. Your agent can run you quotes for the different options. And I have a slide kind of at the end where you can actually run your own quotes. So I threw the slide in because this is very important. When you have insurance, one thing that you need to stay on top of, and this is something that oftentimes when we get involved with disasters, and people have crop insurance already, you can't just jump into crop insurance due to a disaster unless it's done prior or much earlier by that sales closing date. But once you have insurance and something happens, the best advice I can give is notify your company/agent immediately when there's been damage. The policy itself requires you to give that notice within 72 hours of initial discovery. So that gives you a little bit of leeway. There's times that events happen that you may not be aware. You saw a storm, but you didn't get to the field. There was hail at your house, but you don't know if it hit the field. This is when you initially discover the damage, and then you have to follow up within 15 days. But this is important. This protects you that you've put that notice of loss. If you just think the company's just going to come out and send a loss adjuster because there's a widespread event, and you're just sitting back and waiting for that to happen, that will not happen until you provide that notice of loss. And unlike property casualty insurance, there is no penalty for filing multiple notices of loss. It doesn't increase the rate or have any impact. Essentially, anytime you notice some event, whether you think it actually caused real damage or not, you can file a notice of loss. Another thing that's important is, say you filed that notice of loss, but the company hasn't come out to appraise it. Do not abandon the crop and do not destroy the crop, because they have to determine what production is still remaining to determine your claim. And if you do one of those things, potentially you could be assessed with uninsured cause of loss. And then there's, throughout having crop insurance, create an insurance file of all of your information to keep it together so you're informed, so you can have a more informed discussion with your agent. Also, that notice of loss, keep that in your file. So some final thoughts. I know we talked earlier about the drought, water outlooks. I'm pretty pessimistic. I was very pessimistic this spring, and I was kind of a doomsdayer, a doomsday sayer, and it's gotten even worse than I thought it possibly could. And it's maybe southern Idaho is not as bad as the rest of my region. But looking ahead, and I have sort of the current drought monitor as of July 13th, but looking ahead, more crops are going to be linked to disaster. More crop insurance is going to have linkage to disaster assistance, if disaster assistance is even available. There's an increased trend of observances of extreme severe weather in our region and everywhere. Many producers self-insure in the West, and I think that's due to irrigation, or they view that they've just had infrequent loss history, that their location and their management practices, they can just manage it and they're fine. I think that's certainly has worked. I don't know if that's going to work in the future. Drought, significant portion of Idaho is in D2 intensity now, with increasing portions moving to D3 and even D4. To make a special note about D4, this means the average should only occur 2% of the time, or roughly once every 50 years. But that dark color is getting bigger. Drought in the West seems to be happening with more frequency than that once every 50 years, at least at D4. Loss of irrigation water supply is an insurable cause of loss, but eligibility in the landowner crop insurance has to be built up. There's kind of some new things that crop insurance has done that makes it a little more challenging for somebody to just immediately jump into crop insurance and get covered for loss of irrigation water supply, but that would kind of be a lengthy conversation to talk about that. So drought continuing. I'm not an expert on drought or water hydrology, but this map seems pretty scary to me, with what I would call the turd color on that map and most of the West. Droughts are slow to develop and intensify, and usually last a while before average conditions return, or even average conditions improve the situation. The soil moisture deficiencies really seem questionable to me. Can you manage the production of crop under the same lack of rainfall and intense heat that we saw this year, and if it happens again in the future? It's not a question about that has to be answered today, but perhaps the lessons learned this year should prompt some to reevaluate their current levels of crop insurance, or explore crop insurance for the first time. Doesn't hurt to explore coverage options along with the associated costs by visiting a crop insurance agent. So getting close to the end of my presentation, this slide shows a screen print of RMA's homepage, at least the top portion of it. What's highlighted there is the link to our homepage. Something I wanted to point out, that's some useful tools that I've circled there, is if you click on tools, you get a drop down. One is Agent Locator. That's how you can determine what agents service your area. I think it generally shows sort of where the agents are located. So if you're new to crop insurance, this is how you can go find an agent for the first time. Or if you want to change agents, this is a tool to look to see what other agents might be available. The actuarial information browser, that's where you can look by crop and county to see, for one, if insurance is available for your crop in the county. You can see the prices, you can see the dates, a lot of other useful information. The one furthest to the right is Cost Estimator, and that's where I mentioned earlier, this is where you can run your own price quotes. It might seem a little intimidating at first, but just play around with it. It's not going to result in anything. It's not going to break anything. You can put any numbers in it, run any estimates you want. So please feel free to use that. But that's a way to, if you want to run some things before you even have the initial discussion with an agent, or you don't want to bother with an agent, you're just curious about how crop insurance works or what it costs, at least you can run that. Maybe that might prompt you, after seeing what it actually costs, might prompt you to then seek out an agent. So that's the end of my presentation. I just want to say thank you, and I guess turn it back over to you, to Juliet, if there's time for questions or anything like that.
Definitely time for questions. Does anybody have any questions immediately? I'll go ahead and start with a couple questions of my own. You actually answered some of the questions that I was running through my head. And when you were talking about self-insured versus crop insurance and the growers who do use or don't use, but given in the past, I know it's an insurance policy, but do you have any numbers on the overall longevity of those producers that do use crop insurance versus those who self-insure? Because I do know some growers that self-insure and expect that's their obligation.
No, I don't really have numbers. My sense in talking with producers, and it varies from area to area. In the Midwest, I would say you're upwards of 90–95%, and you give a presentation about crop insurance in the Midwest, you have half the room stand up and say crop insurance is vital to me, and they would lecture any of their neighbors who don't take crop insurance. Out in the West, Idaho tends to have less crop insurance than some of my other states that I oversee, like Washington and Oregon. I think that's the prevalence of irrigation. I think a lot of it is kind of a legacy thing, that if your dad had crop insurance, you tend to follow what your dad did. And I'd say most producers kind of, once they are set up with crop insurance, and a lot of them were set up in the past, if it's a family operation or a business, most of the larger operations take crop insurance. Very small operations, there's various reasons they tend to not. For one, I guess they're so small, it's not a primary source of income. When you're larger, or that's your sole source of income, I think crop insurance becomes more vital. But most producers, they have the same thing, and if they have a conversation from year to year, they're just with their agent, it's, yeah, sign me up for the same thing. Whether you talk to your agent or not, it automatically rolls over. You'd have to engage with your agent to actually cancel it. But I'd say, as far as seeing specific numbers where I've seen some changes from year to year, I'd say no. On your like wheat or barley, it stayed about constant with maybe a slow trend up. When we introduce new plans of insurance, then producers, that kind of opens a new realm. Like, say hops is not presently insured, we could see a hop policy in the future. Well, that's going to open another avenue for crop insurance there.
So if that wasn't specifically insured, then you'd look for whole farm revenue protection.
Correct. That would be an option you could explore.
Okay.